Welcome to OAWA's weekly update on the economy and markets. This week, we begin with a significant global event. The US Federal Reserve has yet again hiked key benchmark lending rates by 25 basis points to bring it in the range of 5 quarter to 5 half. The Fed also said it would assess a range of data points in determining the extent of additional policy firming, which indicates that they also see more monetary tightening ahead. The quarter percentage point hike on Wednesday, which was also in line with analyst expectations, is the Fed's 11th since it began an aggressive campaign last March in response to rising prices. After peaking last year, US inflation continues to slow, but it is still above the Fed's long-term target of 2%, suggesting more policy action may be needed. It's not just the US which is worried about inflation. Domestically, even India is worried about rising food prices. Last week, we talked about how tomato prices have shot up this year. And now, India has banned the export of regular white rice, leading to reports of Indians in America rushing to grab rice packets. The reason being rice prices have gone up by 11% during the last year, and due to the erratic weather conditions this year, rice crops have got damaged in certain states, which may lead to lower rice output. With prices of vegetables and now rice trading firm, it is feared that food inflation can rise up sharply again. However, India's ban on rice exports can have a ripple effect globally as India accounts for 40% of global rice exports. Moving on, the oil and gas sector was recently in the limelight. According to a report released by CRISIL recently, oil marketing companies, that is OMCs, may see operating profit rebounding to rupees 1 lakh crore this fiscal compared with an average of rupees 60,000 crore between fiscals 2017 and 2022. Healthy operating profit in marketing margins and gross refining margins are expected to be the key drivers, coupled with lower crude oil prices and no cut in retail prices. Higher profitability will help improve the company's credit metrics, which had weakened significantly in the past few fiscals amid muted profitability and significant capital expenditure. The report, based on three state-run oil companies, IOC, BPCL and HPCL, said. Moving on to news about an index heavyweight. Engineering and construction giant Larsen Tuber on Tuesday announced that its board has approved a rupees 10,000 crore share buyback of up to rupees 3,000 apiece, as well as a special dividend of rupees 6 per share for the fiscal ending March 2023. The company also reported a better than expected consolidated net profit of rupees 493 crore for the first quarter of FY24. This is the company's first such offer in its 8-decade history. The intent, as per the company, is to improve the group return ratios by returning surplus cash to shareholders. And finally, this week, news of two big giants entering the Indian mutual fund industry also grabbed the limelight. Jio Financial Services and BlackRock have agreed to form a joint venture in a partnership of 50-50 to set up an Indian asset management company. BlackRock, the world's largest asset manager, will re-enter the mutual fund industry after a gap of nearly 5 years. In mid-2018, it had exited the mutual fund business after selling its 40% stake in DSP Mutual Fund. For Jio, which recently demerged from its parent company Reliance Industries, the joint venture with BlackRock is the first major announcement in the run-up prior to its listing on the exchanges. That's it for this week. Please click like, share our content if you found it useful, and do visit our website www.oawa.in for information on our courses. Bye.